traders. This is Gary Odom with TestedWisdom.com, and I'm excited about what I have for you today. One of the things I have for you is some free software. I'm going to give you the software that I'm going to talk about today. And why am I going to give it to you? Because I want to help you out. There's a lot of people out there who hesitate to trade big money stock because they simply don't have the money in the bank, right? Hey, I've been there. I know how that feels. Now I could buy 100 shares of this stock, no problem. Walk off shining. But you know what? You don't have to. You can trade this stock without having a big bank account using this tiny little study that I have built that will be available to each and every one of you absolutely free of charge. Eventually, I haven't put it on the website yet because I just wrote this thing. Here's what happens. You go to this little thing called maximum buying power. You have two entries. That's it. How much money do you want to invest? It says 5 grand. Frankly, that's pretty much going to be the minimum if you expect to make any money at all. If you don't have 5,000 in the market, you pretty much can't buy anything. Uh, yeah, you can buy some things, but things that really move, really make you money, you can't really buy a whole lot of it, and you don't have to. And we decided we want a risk reward ratio of 5 to 1. All right, let's just take that as a given. You can change these numbers, but that's what we're going to work with today. All right, so here we go. Here's what it tells us. It tells us that you have to be willing to take a $12 risk. Can you handle that? I think you can. And it tells you your stop is going to be 4 points. And you get to buy all of 3 shares. Not a lot, but that's okay. Don't worry about it. And you're going to invest $4,302. And your computed reward for this is 60 bucks. 60 bucks. Gee, Gary, that's not very much. Hey, we're on a 15-minute chart. Wait till you see what this will do. Well, let me tell you something. If you only make 60 bucks a day, and I'm guessing, but there's probably somewhere around 220 trading days in a year. And if you just did that every day, 60 bucks a day, do you realize that's $13,200? Huh? Have you thought about that? You almost double almost tripled your 2.5 times your trading account. At the end of the year, if you did that, you would have 18,000, but actually you'd have more because as you built the account, you'd been able to buy more and more and more shares, and it goes exponentially. So in a year's time, you can grow $5,000 to a huge amount of money. Does that sound good? It is not blue sky. It's very achievable. If you're cautious as to how much you risk, set reasonable profit targets, you will do just fine. Let's take a look at this chart. This is Google. Let's just take a look right here. You'll notice that we had this big gap. Good time to be careful. And sure enough, it tried to fill the gap and came right back down again, which is not unusual. We know it's still going to want to try to fill this gap. And it did. And let's say we got let's say we're waiting for 3 green candles above a line of support, which is what we have here. The SRT is showing you it's got a line of support here. Let's just say we get in there. That's about 1340, 42, whatever it is, you happen to hit it. And it tells us that we want a reward of $60 right here, and that we need to add 20 points to our entry price. So with 1442, so we're going to talk about what? 1462? Is that it? Yeah, that's what it is. 1442 and 1462. I'm writing that on a piece of paper right now. So we go from 1442. Where's 1362? Why, it's in this big run up. And you know what? You would have set an exit price that you want to sell at 1462. That's what you have to have. It's a limit buy. You can't sell it any less. I want to sell at 1462. I don't want to sell at 1458. I have 1462 in here, and I'll take that or anything that's better. Guess what? It takes you out at 1462. Big deal. What is that? Well, frankly, that's 60 bucks. Remember that 60 bucks I was talking about? Yeah, that's your first step to tripling your account. Does that sound good? Maybe quadrupling it. All right, let's just look at something else. This is trading the 15-minute chart. Here you risk $15. You buy 4 shares. You buy 3 shares. You have a stop of 4, but you buy 3 shares. The investment amount is $4,302. What if we decided you wanted to play it a little bit longer? Let's go to, say, a 1-hour chart. Oh, guess what? Here's our gap. Not necessarily the same one, but it is a gap. It starts to do a recovery. And notice we've got some really crazy stuff going on up here. So we don't know that at this point. We haven't seen this. All we are looking at is this. Frankly, you don't have an entry here. The momentum is still against you. And if you had the studies in, you would see it was still against you, and it would not let you enter there. However, it certainly would let you enter over here because the momentum's been going your direction. It's broken this zone. So let's say we entered here. 1450, we'll say. It says 49.47. Let's say 1450 is going to be our entry point. Very similar to the other price. The other was 1450.42. So we're getting in 1450, and lo and behold, it gaps on us. Wonderful thing. Only this time it's a gap and go. And it continues all the way up here. If we are able to get up here, let's see, 1450. We need 14 what? We need 1450, and 46 is we need 1496. Can we get that? Can we get it? Yeah, we got it right there. That takes us out for our target. Now, where did I get these numbers from? Right here. This is what you add to your entry price, 46.6 points, which gives us $140. Okay? Now, the time period's a little longer. It's maybe a day and a half. Let's see. Friday, Monday, Tuesday. No, it's like 3 days. Yeah. So, $140 on a 1-hour chart. Might have been better off trading that 15-minute chart, right? Yeah, you could have done that maybe 3 times and get $180. But either way, whatever you're comfortable with. Maybe you want to go to work. You don't want to sit around and watch the chart all day, and you want a longer time frame. Fine, we can do that. Because once you get in, you can set your stop, which it tells you right here is 9.33 points to risk $28. Big risk, right? Not at all. And you set your exit where you add your points to your entry, and you're gone. That's it. It'll take you out where you're at work. But let's say you really want to do this, but you want to put it on a day chart. All right, we'll do that. Here's a day chart right here. We have a lot of entry points, but we also have a little more rough market. So what's going to happen, you'll notice we get some drops here. 1333 all the way down to 1389. That's about 26 points against 20, 33, 24 points, I guess. And it tells us that our stop is 19 points. So it would have taken us out in here somewhere. But it wouldn't have, because that's 19 points from our entry price, which is down here. Okay? Now, what I suggest that you do is you put a trailing stop on it. Because maybe you'll make some money even though it backs against you. It's a small amount. 19 points is not a lot. But maybe that would be a good idea to put a trailing stop in. And it would still make you some money. Because if you entered down here, you would take it out over here. You'd still be profitable. If you don't want to do that, if you want to ride it to its run, You can do that too. Now you're starting to be more of a swing trader or buy and hold kind of trader. And let's look at the numbers up here. In this case, you're going to risk 58 bucks. Got a stop of 19. Your buying quantity is now 3, still 43.02. Price is going to be the same, okay? The target's going to be for $290 profit, and it's over several days. So what I'm telling you is you just might be better off playing that 15-minute chart, taking that $60 a day, risking only 12, right? And be done with it. You said, oh dear, I have to go to work. Not a problem. You can still do it. Let me show you how. Let's go back to the 15-minute chart. All right, here you are. It is what time in the morning? It is Thursday morning at 9:45. Today, you do not trade because you've got this big gap here. You will not be having a signal. It's not going to come. You will not trade this day. All right, so you go away and you get on your cell phone. All right, and your cell phone tells you here you're about at lunch, and you see this little candle here that's still not going to give you a trade signal because the momentum has not kicked in. But you see this line of support here, and you're looking for something that's going to reflect a continuous move. Here you had 1, 2, 3 candles, but these do not have the wick formation you want. See how it's got an upper wick, much taller than the others, upper wick, much taller than the others, got an upper wick. That shows you that the bears are still pushing it down. Here you come over here, you got a green candle. It still has an upper wick, only marginally longer. Now the wick is longer on the bottom. So you say, it looks like the bears might be entering the picture. Is this a lead pipe certain trade? No. There's an element of risk in it, but the risk is $12. Okay? So anyway, you enter this trade right here, 1441.50 on your little cell phone. All right? And you also tell it that you want to get out in 20 points. We've been for this before, it's just a little bit different number. Which is going to be 1462.50, right? And we already know that you hit that. We looked at it before. You hit it over here just before you get off from, oh no, you get it the next morning. Yeah, 15:45, market closes. You still haven't hit your 1462. The next market, it opens with a spike. You're liable to get out up here 1466 or whatever. You've got a sell in place. It will take it. It will take it. I mean, even though it's higher than what you have, it'll take it. That's to your advantage. It couldn't get you out at 1466. But anyway, your plan was 1462, and that's your money. That's your $60. Take it, put it back in the account, and then do this trade again, over and over and over and over again, until that account gets bigger and bigger and bigger. And every time you add money to this account, it allows you to add more money that you're willing to invest, which allows you to buy more shares, which allows you to get larger targets and larger profit. And that's the way it works. It's that simple. So go to the website, download this little piece of software, plug it in. You got 2 entries to make, how much you want to invest and what your risk reward is, and you have all the information here. And I'm going to explain it to you one more time. This is how much you're risking, $12. This is you make 4 points on your stop. So any move of 4 points against you from the entry will take you out. And if you put it as a trailing stop, it'll take you out in process. I don't think there's a 4-point move in anywhere in this from candle to candle. So let's see here. This is a pretty big candle. If you had a trailing stop, it would be at 4 points. It would have run it up to 1445.04, and the low on this is 1443. Yeah, it might have taken you out here on this candle. That's the problem with trailing stops. But probably not, because it opened here and it didn't come back down, so it probably would not have taken you out. You never know. This is a green candle. Had it been a red candle, it pretty certainly would have taken you out. But there are no other red candles in here. So that little old 4 point stop would have probably carried you all the way through with a trailing stop. Doesn't always work that way, especially when you get in these chaotic territories like this. Could easily take you out. But again, it's $12, right? You spent that much on lunch, remember? And your investment amount is stipulated there. This is what your reward's going to be, and this is how many points you're shooting for. End of story. Long video for a real short explanation, and I guarantee you you're going to enjoy it. Give it a try. It's free. You got nothing to lose except $12. Have a good one. I'll see you on the other side.